Welcome back to Explain the Charts. Today, June 19th, 2025, we're taking a comprehensive look at Tesla, TSLA, stock, blending both news and technical analysis to give you a clear picture of what's happening. First, let's address some significant current events. Recent news indicates Tesla has temporarily halted production of the Cybertruck and Model Y at its Austin factory, sending ripples through the market. Adding to the mix, Tesla also teased plans to roll out its Robotaxi service this weekend, a move that's drawing both excitement and scrutiny. Let's start with the one-day chart to get a broad overview. Looking at the one-day chart, we can see a significant pullback in recent days, potentially influenced by the production halt news. The stock is currently trading around $322, a level we need to watch closely. There's been a lot of volatility in the past couple of years, with a 52-week range of around 179 to 488. Zooming in on the one-hour chart, we get a more granular view of the recent price action. We can see some consolidation around the 320 level, suggesting potential support. However, the downward pressure from the negative news could break this support. Now, let's switch to the 15-minute chart to analyze intraday movements. Here, we observe tight trading ranges and a lack of strong directional momentum. This choppiness reflects the market's uncertainty regarding the Robotaxi launch and the factory shutdown. The next couple of days we'll be looking for a break above or below this range to give us an indication of where it may be heading. Now, let's bring the news into our analysis. The Austin factory production halt likely contributed to the recent dip. However, the anticipated Robotaxi launch could be a catalyst for a bullish reversal. The market is weighing these two factors, creating the current sideways movement. If the Robotaxi launch gets delayed or is not received well, then we could see further downside to the stock. Key price levels to watch are the support around $320 and resistance near $330. A break below $320 could trigger further selling pressure, potentially leading to a test of lower support levels around $300. Conversely, a successful break above $330 could signal renewed bullish momentum, targeting the $350 range. Whether these values can be reached depends on the reception of Tesla's Robotaxi and future delays to production. In the short term, look for a break of the current trading range on the 15-minute chart to signal a potential move. Monitor news regarding the Robotaxi launch closely, as this event will likely dictate the immediate direction of the stock. Long-term, Tesla's success hinges on its ability to overcome production challenges and capitalize on the autonomous vehicle market. That market is a significant but highly speculative market to be involved in. For this reason, predictions on Tesla's longer-term prospects are inherently more unreliable. To recap, we're watching $320 as key support and $330 as resistance. Given the current uncertainty, a break of these levels could lead to significant moves. Remember to stay informed and manage your risk accordingly. That's all for today's analysis on Explain the Charts. Until next time, happy trading!